That's the reason why you should sell and buy NIO. Hi guys, it's Eric from Hong Kong based in Germany. I've been investing since I was 17 years old for almost 20 years. I want to give you guys alternative perspective about investments related to Asia. Today, I want to talk about why you should sell and buy NIO now. So what is NIO? It is an electric vehicle manufacturer and charging solution company based in Shanghai, China. It produces EVs, for example, sedan, SUVs, and sports cars. The latest model is ET7, which is a sedan that they're going to export also to Norway and Germany. For charging, they have a number of solutions: battery swapping, home solutions, charging trucks around the country just like charging station, and even on-demand pickup and return charging. The latest development is that the share price of NIO went up a lot on the 13th of October. There are a number of reasons behind. From the macro point of view, Meituan was fined only $530 million, which is much lower than expected. That's why the share price of Chinese technology stock went up all along. For example, Alibaba went up 8% in one day. The second macro reason is because of BYD. They announced a joint venture in the US to provide fleet as a service. The first batch would be 5,000 cars, which is not a lot but still a significant first step for its passenger cars, following the first step of their buses. The third reason is that Tesla producing a record number of cars in China. In September, they produced 56,000 cars. Only 4,000 of them are sold overseas. That means they are producing and selling much higher than expected in China. So how about factors specific to NIO? They are already delivering their first batches of cars into Norway, and they plan to have their luxury sedan ET7 to Germany by the end of next year. However, the most important trigger is that the top investment bank Goldman Sachs raised their revenue forecast for NIO. They also raised the rating from neutral to buy. The target price remains $56, but it's already 65% higher than the actual price when the report was released. Talking about that, we transit to financials. This is one of the reasons that the share price is 34% below its July value. NIO is losing 650 million RMB. Yes, just in one quarter. And we are not expecting them to make any money in the coming 4 quarters. As it is not even making money, there's no PE ratio, price to earnings ratio to talk about. If we look at price to sales ratio, it's much higher than the average. We are talking about 13.6 versus the S&P 500 average price to sales ratio is 3.14. That is more than 4 times higher than the average. But having said that, 19 out of the 21 analysts gave a positive or buy rating. What's the reason behind? The growth story, of course, they made a record number of 10,628 vehicles in September. This is a 125% increase compared to 2020. Their target revenue in 2021 is $5.6 billion, but they're already banking $2.5 billion in the first quarter. And next year in 2022, they are expected to grow 67%, and a further 45% growth based on the 2022 figures. In 2023, it would be $13.6 billion. That's a huge amount of growth. Let alone if you compare Tesla with NIO. NIO has a valuation to revenue ratio of only 7.5 times. Guess how much for Tesla? Tesla's valuation is 13 times higher, 13, higher than its revenue projected for 2022. It comes at no surprise that 7 out of 7 investment banks in Wall Street gave NIO a buy rating. The average target price is $62. That means a potential to go up 71%. Hey, let's go and buy it now, right? Hold on. We still have one hurdle: government policies. As we all know, the Chinese government is cracking down on technology companies. For example, Alibaba got fined a record sum of $2.8 billion. Meituan also got fined $530 million very recently. That's why the stock price of Chinese technology companies tumbled. NIO's cars are also highly digitized and highly connected, meaning they are collecting a lot of data. So if the Chinese regulator decided to probe into this matter about data security, their share price would certainly go down as well. Let alone that both US and Chinese governments do not like Chinese technology companies listing in the US. If you don't understand the reason why, check out the link above for my video on that or in the description below so that you understand the background. If NIO is being forced to delist from New York Stock Exchange, it would be a huge disaster for the share price. The good thing is that so far there's no sign that the Chinese government wants to crack down on electric vehicle companies. After all, it is committed to have at least 20% of the new car sales in 2025 to be new energy vehicles. We are talking about 20 million cars sold every year in China, so this is not a small number. And fighting climate change has been high on the political agenda. If you look at the recent power outage, partly it's also attributed to the fact that the power plants using coal try to meet the target of CO2 emission by the end of the year. Okay, so shall we buy or sell NIO now? Electric vehicle is the trend. The industry as a whole would benefit, no matter Tesla, BYD or NIO. And especially for Chinese manufacturers, they are already gaining foothold outside of China, for example in the US or Europe. That's why the sales revenue as a whole for the industry would go up a lot. As a value investor, I have trouble convincing myself to invest in a company with such bad financials. There's obviously no PE because there's not even a profit, and even the price to sales ratio is 4 times higher than the average in S&P 500. Also, we do not know when the Chinese government might change their mind and decided to probe into data security of electric vehicle companies. On the other hand, either US or Chinese government might force NIO and other Chinese companies to delist from the US stock exchanges, so there's a high risk. That's why I'm not going to invest into NIO for the medium term. I'm talking about 2 to 5 years. With the super bullish target prices set by the investment banks on average 70% higher than the stock price now, I think it would be a good bet in the coming 1 year or so. What I'm going to do is that when it reaches my target price, I will sell half of it. The other half would continue to ride the wave going upwards until it drops back to a level that it breaks the technical support, and then I will sell all of them. Are you going to buy NIO now, or it doesn't make sense at all? Leave me in the comments below. If you like the video, remember like, share and subscribe. Even better, click the bell button next to the subscribe button so that you're not going to miss out. It will be a great motivation for me to continue.